All right, good morning, guys. How are you? Say hello. Let me know you're there. Dollar is a tiny bit weaker this morning. Not a whole lot. Bitcoin definitely. So, crypto market, which is a big market and one of the leading markets. S&P 500 and growth markets also down and pulled back this morning. We are going to be opening. Oh, and also rates are moving up. So there's some front-loaded preemptive feeling that the Fed is going to talk about not lowering rates as soon as they were anticipating to lower rates. That may cause rates to go up. Value stocks are holding firm. Coca-Cola is up like 5% this morning. Must be earnings. The other bit of information is, that's the one, Coca-Cola. Oh, what's this? Yeah, Coca-Cola. And there's a $9 billion company up 2%. That's IonQ. Okay. All right. And Jay Powell will be speaking tomorrow. Today at 10 a.m. So in about 35 minutes. And that talk is going to be moving the market around. I will be taking my first break around then from the live stream. But we're going to be here for the first, for the market open. And tomorrow morning is CPI. That'd be the inflation number. So even though Jay Powell's speaking today, and that's going to be huge, and that's going to cause the markets to go a little crazy, tomorrow's CPI number is going to be what everybody's been waiting for. And so the market will take direction, whether it's negative or positive or sideways, mostly tomorrow. But then it'll be followed up by PPI Thursday morning, which it can depend. It can have the same reaction. Although CPI is the big headline inducing number that everyone talks about. So we have these 3 days, Tuesday, Wednesday, Thursday, of just market, probably chaos. So you got to have your stops wide. You got to have your resilience. You have to sort of gone in prepared for to be like expecting risk. Risk on the stock market is different than, I grew up thinking about what risk is. Risk, the way I grew up, the way I've always thought about risk is endeavoring. Risk is endeavoring, right? But that's not really what, maybe you have a healthier outlook on what risk is. But I can tell you this, that on the stock market, it feels like risk is endeavoring. It's like placing your bets. It's endeavoring. However, risk on the stock market is just like real risk. Risk is like fire. Risk is like somebody tells you, I'm going to give you $50 a day from now on. But you have to store this dynamite in your basement. That's what risk is like. You're taking on danger. And that danger has a probability of blowing up and destroying you. And so you have to contain that risk somehow. You have to do what you can to contain that risk. So you might say, okay, $50 a day, that's good, but I think I'm going to need to invest in about a $20,000 um, explosion containment unit, whatever that is. So now here you are investing in having this $50 a day revenue stream before you can reap the reward of the revenue stream. So here you are taking on risk, having to put up all this money in collateral to contain the risk from causing massive damage. That could be like a stop loss or whatever in the parallel analogy. And, then in return, you will get X. And so you have to you can't be insane. You can't be someone that's, if you want to grow money, on one respect, you can't be someone who's risk averse, or it's, completely risk averse, or you're going to deflate everything, all your money. You're going to put it into too risk adverse savings or formats, assets that could be way too. A risk averse person might not even buy a home, So like a risk averse person just doesn't want to risk their money. Then you have people who are okay with risk. They have a mental problem, that they have to get over it. They have an unhealthy outlook on risk as well. Being risk averse is unhealthy, and then being having a flagrant disregard for risk is also unhealthy. So you have to find that healthy viewpoint and perspective on risk. And just like in all things healthy, that starts with total awareness, like doing your best to see and know everything you can about that risk. So on a day like today, your fortitude in the face of 3 days of upcoming massive risks is simply going to be that you've planned to lose properly way beforehand. Like every time that you start a risk, you've measured and created the amount that you're willing to lose, and that's, to your stop. And so that if that were to happen, you are going to take that punch because you said to yourself that I'm willing to take that amount of risk in exchange for the potential for this amount of reward. And I'm going to do so carefully and in a controlled manner, but sometimes I'm going to get clobbered. So sometimes, you got to say that. But, one of the ways to combat risk is swing trading is a great way, and swing trading with wide stops. Wide stops do their trick during risky times. Tight stops get obliterated. Tight stops get hit during risky times. So we are opening gapped down this morning beneath yesterday's prices, but still above that sort of big sell-off day on Friday. But that's no matter. I mean, all in all, we've turned around here. It's a pivot reversal. We could definitely, pull back all the way to this pivot point, as a matter of fact, and it wouldn't mean anything. Prices could get a lot worse, and it still means nothing, and we're still in a good spot because it won't have broken trend. And then we go up, and then we continue. So you ain't seen nothing yet if the stock market wants it. So today could be a red day. Tomorrow could be a red day because of CPI. That could bring us way down here. And then PPI turns it around, supports it, and creates this pivot down here. That could happen all this week. This whole week could look like that with a final little up thing because of PPI. And then next week, we just sort of suss that out. We're spending all this time in this middle zone again. And then following week, we're trying to do something with it all, but maybe not. We got to get above these levels. All right, well, the market is open now, and expect risk. There's no reason not to expect risk right now. High risk. Powell speaking in 30 minutes. I believe that'll be something to the effect of in front of Congress, but it could be a press conference. I'm not sure. I haven't looked into the details of it. But it will be him speaking, and every word that comes out of his mouth, it'll be an update, and every word that comes out of his mouth is going to shape the market in live time. I don't know how long he's talking, whether it's 20 minutes, an hour, 3 hours. I don't know. But during that time, the market's going to be very tense. And then after that, it's going to release and it's going to try and take direction for hours into what it perceived as what Jay Powell was saying, but also with a little bit of trepidation for tomorrow's CPI numbers. So there's this room, there's this whole there's just this area of just all this nervous tension that's going to be going on this morning for the rest of the day. And then tomorrow morning is going to galvanize a direction. And that direction could be reversed or doubled down on Thursday morning with PPI and get fleshed out for a few hours. And it won't be until like Thursday at noon that we are through this vortex of pain. All right, so it's important for you to understand that and have a healthy understanding and outlook on risk. All right, so I just got a profit target hit on CNBS. Let's look at that. All right, nice follow through. Let's see, what is there going to be earnings on coming up? And I need to cut anything. I've got a couple things that earnings are coming right up. I need to make sure I cut anything that's not going to be worth holding. This is tomorrow morning, and it's pulling back on the open while the market is going up. So I'm going to go ahead and close out VRT because I don't have enough padding. Boom. So that's the process. When earnings is coming up, if you got lots of padding, maybe you can risk holding through earnings. You don't have to, but maybe you can. Also, earnings coming up for me is Bros, and that is tomorrow evening. So I will hold on to that for one more day, and we'll see where that's at. But I am up 18% or more, and have snowballed that position. Also, to watch out for coming up on earnings is APP. And I am up 6% since the entry over here. What I did was I added on and then converted it to an anxious type of trade. So for those of you who follow me, you know what that means. And I will probably just let that play out for today a little bit. Oh, and tomorrow, because that earnings is coming tomorrow night, tomorrow evening. So I'll let that play out. Next one is Reddit. Reddit's earnings are coming tomorrow evening. So I will, and I have a large profit buffer on that. I'm going to likely hold through that. All right, now this morning we have about 45% positive breadth on the growth market. My meters show 54.1% positive breadth. And what that means is it's like 75% green. Does that make sense? 50% positive breadth is like 75% green. Everything, 75% of everything is green. Oh, looks like I need to get out of CEG. It's hitting my stop. Okay, we're bouncing a little bit. Nope. It's hitting my stop. I'm going to go ahead and flatten that puppy out. All right, so I had a stop hit, and that's what you got to do. Got to take the punch. I'm going to move that and the other ones to my closed folder of positions that I closed out today. So far that was VRT and CEG. And I got out of VRT because it's earnings tomorrow and it's kind of pulling back, and going to take what I have, get out of the way of earnings. All right, now I've had some other orders filling. So what's been happening here? We got a hit on Geo is doing what we like. No? Oh, it's going the other way. So I must have hit a stop. Geo, it did hit a stop. Okay, but actually it's bouncing kind of quickly. But I did get stopped out, and I'm inclined to flatten and give it a few more minutes. Geo stopped out of. CNVS, I hit 3 targets already, so CNVS is pushing nicely. There's not much in my port pushing at all, and yet I do see the S&P 500 in the market is moving up. But leaders are under pressure, definitely. I am going to take a moment and look at my Webull account. Looks like par not doing well. Let me go take a look. Yeah, par's at my stop. So I am going to go ahead and, well, there's a little bit of a bounce there. Let me see. So I'm going to watch Geo and par. These are things on the chopping block for me. We are 7 minutes after the open. There hasn't been a lot of trades on par yet. I'd like to see some more trades and see where it goes. Geo is bouncing. It's being bought up. After the close today will be earnings from Dash, Upstart, DoorDash, Lyft, ET. Really? Why didn't I show that in my system here? Because I do have ET, I think. Ah, yeah. All right, let's go take a look at ET's situation. So say it's pulled back quite a bit before earnings. I believe I'm up on it. Yeah, but I'm going to go ahead and close that out now as well. Yeah. Okay, there's that. But yeah, after the bell, there's going to be earnings from. So let's take a look at all those. Kind of see what's going on with that. SMCI is one of them that's going to have earnings after the bell. Yeah, quite a run up. If you got puts on that, they'd be cheap. And then if it has a bad earnings reaction, all this buying, all these people are going to be trapped, and you're going to get this massive panic sell-off payoff on your puts. That's called Lotto puts, and that's gap theory analysis, pre-gap theory analysis. So that's SMCI. So if we were to look at SMCI's prices for puts, for a Lotto puts, what do we got? Maybe you could get down below 32. What is that price like? 32, $100. That's so typical. That's a great price. $100 for that option. 32 puts, 32 strike puts nearest expiration. Now the 30 would be stretching it, but if it were really to sell, if it really had a bad reaction, it would probably dump and get below 30. Now at the 30 level, you only have to pay $70. It's a little more of a long shot, but it could pay off big because if it is just terrible, it's probably likely to go test $26. So that's $400 on a $70 lotto. So what is that? 4 or 5? It's like 5.5x. Obviously, that would show up as 550% gains or whatnot. But if you got the 30 and it went down to 26 potentially, 32, then you'd be talking about 26 really. $400, $500, $600 of gains for $100, and it's about the same return. But it's less probable. I think you go with the 70. I think you go with the 30. So I'm going to write that in today into the alerts. All right, I put that out there. I'm not playing any lottos this year. I'm staying clean and pure to the swing trading and swing scalping and all the swing trading methodologies that we're doing because I do have this account in a competition. And not just for that, but also I would like to have a 100% tested sample for 1 year. All right, SMCI. So next, Upstart. That's going to have earnings after the bell. And yeah, that doesn't look particularly anything interesting. DoorDash, beautiful. Looks like I have an alert that I didn't act on. It would have been very nice indeed to have gotten in at 177 to hit 199. But I did not. And that would have looked like probably 178 with a stop at 170.50. It's $3.50. And that would have probably triggered a 4-to-1. So $14 on the gain side from 178 is 192. Okay. So that would have been a successful trade and very easy. It would have taken 1, 2, 3, 4, 5, 6, 7, 8, 10 days, 2 weeks. So sometimes that happens. That's why I'm telling you, the swing scalping method can be between 0 and 20 days and typically is between 1 and 5 days. But sometimes it goes as many as 20 days. All right, Dash Lift. I like Dash. I got to put that on our hot list. I like, what I see for sure as hot list stock in a growth cycle that we can scalp. Lift, hell no. But Dash, yeah, that's a beautiful upcycle. Oh, Tossed, it looks like I do need to get rid of. Let's see. Tossed is doing. Geo kind of reclaimed the drop, so we'll just let that sit for a minute. Tossed. It's kind of like trying. Beneath my stop. the bid and the ask for a minute. Let's see if we have strength coming in on the bids or weakness. Oh, we have strength coming in. All right. I'll leave it there for another few minutes then. Let's see. We do need more hot list picks. I mean, I do have a ton of them we can go through, but I just continue to want to build my list of hot picks. So taking another look at Upstart. It is in an up cycle. And back to SMCI. No. If we looked at ET, I'm already in. Yeah, it's in a nice upcycle. Can build this list up. Fresh. Not really. It's not really in the right kind of upcycle. Gilead Sciences. Yeah. Not too impressive. No. CFLT. Confluent. No. Well. Yeah, that's beautiful. Well Tower. Well. ZG, Zillow Group, I believe that is okay. Yeah, we don't want to trade that though. It is in an upcycle, but it's pretty back and forth. Brookfield Corporation, yeah, it is. AIG, these are all things reporting tomorrow. I'm just going to scrub through them. Good morning. SVM. AIZ. EW. PRI. PRI looks very good. I had to put that one on the list. IAC rather. Hell no. AMX. Hell no. BHF. No. CAR. I think that's Avis. Yeah. ALSN. Oh yeah. Allison Transmission. Who knew transmission company could do so well? What the fuck? They inventing new transmissions or something? Oh, it's not what it is. Hold on. What do they make? Oh, that's EDR. Hold on. News. Allison Propulsion Solution gets a contract for Turkish Armed Forces. Why this is a strong value stock? Hell, this has been a growth stock. Let's see. Headquartered in Indianapolis, Allison Transmission is a manufacturer of automatic transmissions for medium and heavy-duty commercial and heavy tactical U.S. defense vehicles. All right. In fact, the company is the largest producer of automatic transmissions, holding the leading position in several niche markets. The firm also offers electric hybrid and fully electric propulsion systems. So this company is going to be gobbling up, I guess, EV contracts. I guess you could say that. But let's look at the earnings. Jeez, how fucking solid is that? Just incremental perfect growth, incremental perfect profiting, and increasing profit margins of 22% to start with, which are now 24%. This is like a fucking computer company. This is incredible margins for a hardware manufacturer. What the hell? Man, if they get some kind of cuts because of what Trump's doing with the USAID, or no, I guess it wouldn't be USAID, but just going through with the Doge thing, Department of Government Efficiency, if they start getting any cuts, that's going to affect this company. But man, the last 4 years have been gorgeous mother freaking growth. And even in their worst year, they were at 14% margins and profitable. Did they ever even have a bearish period? Let me see this chart. Barely. Very resilient. This period here. But even then, from the low point to the high point was the same price. And then the best case to the worst case, roughly, was 32 from, all right, well, that is a lot. 52 to 32. All right, that was a pullback of 38%. But I think that was a bit unwarranted. It was a little bit more than it needed to be. That was probably a very good value buy in that region right there. And as you can see, yes, because now, 2 or 3 years later as an investment, when you could have got in at $36 or $40, now it's hitting $122, 300% gains. Anyway, I don't know. Is this kind of slow? Let's take a look at the ADR. 2%. It's a little slow. But there's no denying it's in an upcycle, and it's a very reliable upcycle. Just I think you can only scalp it. You can't, I don't think you can really invest in it. Let me see if it shows the growth rate here. The growth rate is not super strong. As you can see, it's just little increments of growth, but it is stronger than inflation, so it is gaining market share. However, overall, they're growing kind of slowly. So, but it could provide beautiful scalp entries, it looks like. Let's see. For example, back here, started to go into an upcycle. So let's say if you got in here, stop over here. That would have been good for about a 6 to 1. So 1, 2, 3, 4, 5, 6. So you would have hit that. So it's already given you a 6 to 1 from entry. All right, I'm flattening out a tossed. Hold on. Thought I already did. Okay. So ALSN, we can scalp it. Yeah, keep it on the scalp list. End result of that. But that's an interesting company, interesting stock. Leading transmission manufacturer for heavy-duty military application. All right, continuing down the list, ALSN, ATEX. Now, I mean, when I'm looking for anything in a growth cycle, let's get Glad. Huh. Okay, that's pretty good. Beautiful upcycle lately. But I'm going to start to keep the ADR percent on watch. Yeah, 2%. Ah, but still good for scalping. Bad. Excel. It's a bit too back and forthy, if that's a word. PBI. Yeah, that's a little better. Still, it's a little bit too spurty. Would like to see some more consistency. TDC, no. SMWB. All right, we're down to $1.4 billion market caps. It's not super good. Similar web. Oh, this one looks good. SMWB. WPC. BL. Angio Plus Therapeutics. No, Angie Inc. Internet company. Nope. AKR. That's interesting. ADR is probably kind of low, isn't it? Let's see. It's coming. Internet's a little slow. %2.3%. But it looks like it does provide the scalps pretty smoothly at that. I'm going to keep it on the list in AKR. ADC. Nah. Don't like the way that's scraggling around. Adaptive Biotechnologies. Boy, that's just back and forth and back and forth. Very unreliable. No follow-throughs. Even though it's moving up. DDI. Okay, JPal's going to start speaking in 3 minutes. You may start to see the market just going nuts. I'm going to try to pull it up. Before the Senate. Okay, he's going to be testifying before the Senate. Let's try this one from Yahoo Finance. I believe I'll be able to put this live over here, but I'm not sure if this player will work. We'll see what happens. All right, DDI, diode, nope, 4, GNSS, let me know if you get any echo, by the way, when I do turn him on, because it would be like 2 audio sources coming by. I believe it's gonna try to cut it out, but it might think that his voice is my voice. I could mute myself, I guess. GNSS, IVT, KRG, ES, HIW. It's nice and smooth, but I don't like it. ST, no way. RRR. Sage. Nope. Mirror. No. It's kind of, actually, I'm going to put that on the list, maybe. Mirror. Keep your list. UFCS. No. OS. And finally, MCY. Okay. Now I'm going to go backward through some of our prior hot list names now and just take a look at them, see how they're doing. KC, Palantir. We can look at them over here now. Yeah, beautiful. Duolingo, United Airlines. I think I got knocked out of that. Well, I'm almost knocked out of that. Yeah, I'm almost knocked out of that, unfortunately. Hopefully it has some resilience. Palm. Okay, that's looking good. It's kind of a signal today. Or it was kind of a signal a couple days ago. And it's hitting that same signal point again. I am already in it, but I can easily convert it to an anxious trade if I need to. Palm. All right. Par. Is par continuing to move down or is it bouncing? Par. Par is not looking good. I'm going to go get rid of par out of my par. Okay, flattened out of that. All right, still looking good on Duolingo. I'm in that and that other account. I also need to therefore get rid of it over here as well. We're waiting for Powell to show up, I guess. KC, now Hood. I believe we just looked at that because I think its earnings is coming up. Yeah, Hood is doing well. GLW. United Airlines. Palantir. Cavio. Duolingo. GEV. AFRM. IMS. ANET. TPL. You basically want to scrub through your scan list twice a day. Either once before the market opens so you have some idea of a game plan, or while the market is open, first 30 minutes to an hour. And then again, scrub through it during power hour time, last 2 hours of the market, to decide on making some maybe final decisions. NRG, Monday. What? D? Oh, docs. Looks like I said dogs in my notes. Docs, MSTR. I'm looking for signals. TLM. TLN, rather. CLS. CN. Net. NNE. FEDR. Yeah, that thing's flying. Zillow. SE. Royal Caribbean. Docu. FTNT. Okay, it's a good educational moment here. Okay, so anxious stocks react to negativity in anxious ways. Okay, what we're seeing here is secure pullback so far, but the real anxiety point is going to be when it breaks down this pivot right here, which it might do either today or tomorrow. Once it does, how it reacts is going to tell you whether or not this is a anxious stock or a secure stock right now, still in an upcycle. The pivot to break out of the upcycle is this one. See, because this whole move creates an open zone up here. Anywhere between that last pivot and up above here does not matter. Okay, but that's pivot point reading. But definitely this is an important pivot, and how the stock reacts when it breaks will be very interesting to watch, on DocU, whatever this is. FTNT. Nice. BSX.
Suspensions.
Okay.
Or even being fired.
Can you hear that?
You are within the walls of the federal government, such as a bank regulator.
You will face no
consequences for your actions.
Oh, you're going to get
Pressure of bank.
cut off services to digital asset firms, political figures, and conservative aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research.
Did she say domestic brain purchases?
OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees, canceled. Probes of illegal debt collection practices, canceled. Rules to save people billions of dollars, canceled. If Musk and his OMB directors succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans in Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big driver of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving
There we go.
goals, maximum employment, and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to
That's a good number.
as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we have continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance.
Uh-oh. All right.
We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's...
It sounds like there won't be any rate cuts anytime soon.
2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide...
Okay, he basically just said there's no change on when they're going to lower rates. They're just holding it steady.
We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people.
You gotta understand, that kind of sucks. So that's a little bit bad for the market. So I wouldn't be surprised if we start to see things sell off.
Everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
All right, so no changes. Holding steady. It's a little bit negative for the growth market, because kind of was hoping that we could be lowering rates and making growth easier than it could even be. But this is kind of what's expected.
American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation.
Yeah, regarding the not being able to hear them, yeah, it's low compared to me.
Yet you have admitted that the
threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool.
I mean, basically that's it. I mean, his statement is his statement. Answering questions from here, it's just sort of like saying the same thing in a different way, you know, and helping people understand the micro gap in betweens of what he just said. So with that, I say that's the culmination of this morning's stream, and let's just see how the market plays out from here. I believe it's basically no change until tomorrow. If anything, a little bit negative, tiny bit negative, until tomorrow morning CPI number, which could be quite good. We never know. Let's see what happens. We want it to be lower. That would be nice. Okay, you guys. Mute that. Okay, you guys. Have a good one, and I'll see you back in the group. All right. Bye-bye now.